Welcome to Markets Now. I'm Michelle. Work with Randy Martinson Ag. Grains are mostly higher except for KC wheat. Over in the livestock futures, a little back and forth action in cattle, but currently we're seeing some red in the hogs. And Randy, let's talk about soybeans. Last week, end of week, we took some South American weather premium out, but looks like we're putting it back in.
We are. I mean, the weather forecast, or at least the rains over the weekend, were disappointing. Didn't turn out to be as much as anticipated or where they needed to fall. So that helped support the market, of course, on Monday, and that's spilling over into Tuesday's session here. And right now, the forecast is still hit and miss. So I think that is going to continue to keep some support in this market. If we do see some good rains in some areas, we could start to see this market drift. But right now, the market is looking at the fact that we're not getting the rains. They're not coming where they need to be. And next week, we're supposed to go back to hot and dry. And I think all of that is helping to push that soybean market.
And technically, man, we rallied, 40 cents off the lows yesterday or in the overnight session Sunday night. We're back above the 100-day moving average. So where's resistance? Where do we have to take out to keep going?
Oh, I think we got to go back up to that, $13.85 to the $14 level. It's, we got to break above those levels, close above. I mean, we closed above them twice, and then we kind of caved last week as the weather forecast started to change. We need to get back up to those levels again and cross above it. I think you actually have to break 14 and close above that now to start to see this thing, continue to be on the strong side.
Is it easier to get there when you have lighter volume? We're going into the holiday and we're not going to have as many people trading.
That's a good question. I mean, it's going to be volatile. I think, especially once we get into Wednesday and Friday session, I think the thin trade is going to show up a little bit more. So maybe tomorrow we'll be able to have a chance to be able to see that happen. Friday is going to be really questionable, especially once you go in ahead of the weekend to see what that forecast is for the longer term.
Yeah, and you've got an abbreviated session on Friday. That always makes it a little interesting as well. Okay, corn trying to follow soybeans, but I'm going to call it a reluctant follower.
That's a good way to put it. And that's exactly right. You got wheat that's kind of pulling it down. You got soybeans trying to pull corn higher. 2 billion bushel ending stocks estimate doesn't bode very well for corn either. We're getting the harvest wrapped up. That's likely going to be done now here this week. So in all, I think corn is trying to find a little bit of a bottom. It's struggling to do it, but we need to get some demand. And I actually think corn story is being written right now, but the market's not going to trade it until January.
And that story that we're talking about is we've got some delays in terms of planting of the soybeans in parts of Brazil. So the second crop, safrinha corn, is going to be delayed as well, right?
Delayed, and possibly there's now talk about some guys only going with single cropping, only going to put soybeans in. They're not going to go with the second crop, or if they do, it'll be cotton or some other crop. So right now it's looking like the safrinha corn acres have a potential to drop significantly from what their first estimates were.
Now, you talk to a lot of Brazilian farmers. I know you have some folks that you are friends with there. How dire is it there right now?
Those guys normally haven't been very alarmist. They haven't really talked bad about stuff. They always, are a little bit more optimistic and thinking there's a chance. Well, right now, they're saying the rain is needed desperately this week, or they could possibly see a 30% reduction in what their potential production is.
Wow. I want to also ask you about the Argentina presidential election. We didn't talk about it a whole lot yesterday, but, Sunday night, the market kind of reacted to it initially. Do you think the market does it care about it right now or not?
Probably not right now, but I think as things start to develop, we'll start paying a little bit more attention to it. And the idea is that the new president is going to tie the price, their currency to the U.S. They're going to stop using the exports. They're going to stop an export tax on the grains, which that's going to be interesting. That I think is going to be a tough sled for him to be able to do, because that's how they fund their government, is by taxing the soybean exports and corn exports. So we'll see how that goes as that moves through the system or through their government policy making. But right now, I think the market will start paying more attention to it once it starts to become more reality.
Yeah. And the wheat market, what do we want to talk about there? Because that market just is so frustrating for producers. I mean, we hit these 2-year lows again in Kansas City wheat. We just can't get any traction. Is that because this crop is that much better than last year, or is this just this poor demand that's kind of being a weight on that market?
I think it's a combination of both. I mean, we still don't have the exports, as we know right now. Ukraine is talking about, vessels lining up because of the new insurance program that they're offering for the vessels to be able to protect them to get out of the Black Sea region. We still have Russia exporting, dropping their prices and being more competitive than everybody else in the export market. So we still have that issue. We've got production issues, especially, in Australia and Argentina, but the market doesn't seem to care. It's going to take a demand, something on the demand side to get the wheat market to go. But right now, it is the most frustrating. I mean, it's even for us, to try to figure out that this market should see some sort of a dead cat bounce. But man, this cat doesn't have a lot of life in it.
No, it doesn't. And Russia keeps undercutting us on price. And now we've got the dollar index that's moving lower here, and that doesn't seem to even be helping.
It doesn't, and I know we're competitive. It's just that we're not competitive enough. We're getting routine sales. And I know China's they're looking at importing a record amount of wheat this year. And they're out shopping, but they're just not buying right now. And maybe that's something that'll turn after the first of the year. But at this point, exports or demand is desperately needed in that wheat market. And domestic demand is slowing down. Once you get past the holiday season, we really don't see demand for wheat in the U.S. pick up until spring.
True. The dollar, let's hone in on that a little bit. I think we're at 11-week lows, and obviously that's some ideas that maybe the Fed is going to stop raising interest rates, or is it that they think the market thinks we're going to start cutting rates?
Well, I think, there are stories out there about the possibility of seeing interest rates cut in the second half of 24. I think that's a little premature to be thinking about that. But yeah, the dollars come under some good pressure. We're looking at some, at least the CPI numbers and the PPI numbers are coming in and being supportive to showing inflation is dropping. We're still looking at good employment numbers, but overall, I think that right now the market is expecting that there will be no more rate increases and the potential decrease, and that's helping to put the pressure in on the dollar, which should help our exports. But so far, we're not seeing that.
Yeah, and the bond market has been kind of indicating that as well, right?
It has, yes.
What about this cattle market? We've seen two-sided trade already this morning, but I think we can agree that yesterday's performance after the cattle on feed report was pretty disappointing overall. So, where's the market going? Are we going to continue to see funds liquidate on any strength?
Right now it appears that way. I mean, I think right now we've got a friendly story out there. I mean, we've seen a pretty good drop. This market needs to correct a little bit. We've been seeing, the runs at the auction rings for calves have been large. So a lot of producers are dumping their spring calves, because of the price and because they're worried about price dropping some more. So I think we're seeing a pretty good run. That will likely slow down here now this week and into the end of the year. But overall, I think the demand is there. I think, with the economy still holding on, we're going to see domestic demand pick up a little bit. It might not happen until after, the holiday season, because everybody's focusing more on poultry and other meats than they are about beef right now.
But we're going to get tight again back into 2024, aren't we?
Right now the estimates are showing that our supplies are going to get a lot tighter than they were in 23, because we're still holding back, or we're not, we don't have the animals to go, to be butchering. We're actually imported more coming out of Mexico and Canada to help kind of stave or bridge the gap of what we're missing.
Well, we had a $23 drop in live cattle futures in the February. I think you and I talked about a $45 drop in feeders. So certainly we're oversold and due for a correction. All right. Thanks for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.